Hey, so we're doing a macro live. Somebody had sent a message saying I can't do this live or whatever. Like, I never said I necessarily could, but I don't mind doing it live. So here we are. Here's the macro right here, 1250. Okay, it stops at what I think is going to happen is I think this sell side is going to be taken down here. So I think it's going to probably come up here and fill in these gaps here and then just rocket fire all the way down to sell side. That's what I see happening possibly here in this macro. So we got a swing low that was just taken. So I need to delete that. Well, I'll leave it on there. And then we have a gap right here that was taken in. Okay, so price may actually fill in this gap and then come up here to this mitigation block right here and either come up here and take this high, but I really see it dropping down here. So I'll be looking for a short. But the way the macro works is that it's going to fill in a gap and then take out the opposite high. Okay, it could be the body high or the wick high. Okay, so right now I'm just waiting. The actual fair value gap is here. Let me mark this up. Okay, we got 3+ candles in a row. I like using a dotted line in red means resistance. Okay, so this is the one it's one right here as well. This is a gap here. It's also a gap here in between this candle and that body. But now it's inside of this line here, and this line here is a fair value gap all the way to the left over here. Okay, if I go all the way to the left, it's this one right here. I don't want to zoom in, but you have to look to the left and that sell side is below. So let's go ahead and watch it. Right now it's filling in a gap, a bullish gap. Okay, so based on the macro, here's the order block down here as well, bullish order block. So I could go long once it comes down here to hit this, to come higher up to this mitigation block. That could be my move. Okay, but it also may just, since the structure is already bearish and I really see it coming down here for this low, I could just go short now. So I'm going to go ahead and go short on a low position now. Okay, so I'm going to go low on a 25 position. So I'm short. Okay, I really want to hold for this sell side right here. That's the wick low. So I need to, I don't think it's really going to have a strong reaction until it fills in this gap because we got an order block down here as well. But I'm short right now early because I believe price is coming down here. Now what I need to do is come over here and mark up. I need to mark up the body because this sell side down there is the wick low. But we also need to mark up the body low. Okay. Here's the body low down here. So this is sell side. We need to go ahead and clone this and put body low as well because this is the body low. Okay. I'm going ahead and make this a dotted line. Sell side body low. Sorry about these planes out here. It's a naval base around here. Also, we need to mark up consequent encroachment of this wick right here. So I need to put wick CE. Okay. Now I'm short right now because I believe price is coming down here to take that out. And I'm short on low leverage. So even if it's going higher, I'm okay with that. Stop loss. Let me show you what a stop loss is for that buy that I'm in right now. I'm sorry, that sell. Now we have to mark up. We have a gap up here, but we have a mitigation block right here as well. Okay. We got a mitigation block right here. So price could come up here. We got an ICT mitigation block. So price could come up here and reverse. I'm holding out for sell side body low. Okay, so if price wants to get to that body low, I'm out, even though it may continue to go to consequent encroachment. But it could reverse off of here. So we're still, actually, you're still supposed to be waiting right now. Okay, you're still supposed to be waiting right now if you're new to the macros. I just got in early because I understand the structure. Okay. I mean, it's gunning for this sell side down there, but I'm not going to wait for it to get that wick. I'm going to error on the side of the body being taken. Okay. Even though most likely gun in my head is probably coming down here, but we could see a strong reaction up to where? Well, we got a mitigation block up here. A bearish mitigation block. Let me explain. I don't know if people watch these. I think a lot of people watch the shorts I create, but I don't know if they actually watch the long videos, which is teaching the good stuff. So this is a ICT. This is a bearish mitigation block. Now I'm marking the actual ICT mitigation block is the body, is the opening price right here. Okay, but I actually like marking up the whole body. And so we see it dropping right now. I may just get out at that order block when it touched that order block because I could see a reversal. Let's see where we're at. Okay. It's bullshitting me on the spread. Okay, that's cool. It's bullshitting me on the spread. So, okay, so just hit the order block. I could have got out right there. It's only a few dollars profit, but we're going to see a strong reaction right there because it's off that. This is a bullish order block. But we also have mean threshold somewhere down here. So it could continue to push. But I'm going ahead and get out at sell side body, even though, let's see. So this is the macro. See, it's continue to drop. I'm going to go ahead. If it continues to drop, I'm going to go ahead and get out at the body low. I should have put on multiple positions just to hold for the sell side. Let me mark this up. This is a bearish mitigation block. So I don't know about you, but it's good to actually mark this stuff up so you can know what's going on. I mean, if price continues to drop, that's going to be cool. But the macros, actually, price usually move in one direction all the way until the macro ends to 1010. This is 110. So that'd be interesting. Just see it push all the way down to 110. But oh, there we go. It's a strong reaction now of that bullish order block. So I'm in drawdown right now. Lord have mercy. We may see, let's see. Well, it just filled in this gap. So according to the macro, it just filled in the gap. So it might come up to here and I might be wrong and just have to take a loss. But I'm not actually in on the trade for the macro yet. I just took an early short because I see price coming down here. I'm actually going to get out at the sell side body. So I haven't even did the actual ICT macro trade yet. But looking at it right now, I would have gotten in for a buy right here at this order block all the way up until either this wick low right here or this bearish mitigation block. So if price comes up here, I'm going short because right now I'm in drawdown. If price comes up there, I'm going to go in short, maybe 2 lots or a lot. Okay. So when price hits this right here, I'm going to go short. When it comes up here, I'm going to go short because I see it coming down here. Okay, to this body low. I think it's really going to take this right here, but we see this is the macro. Okay, this green line and this green line was identified as a gap that needs to be filled. So I would have got in for a buy, which I didn't, but I see it coming up here to this wick if it's going to continue to come higher, or this box right here, which is a bearish mitigation block. Okay, what is that? For people that are still kind of new to it, you got a high, you got a higher, you got a lower high, and you got the lowest down close candle in between these two. You have to mark it up. Usually price will come back up to that to reject. And this is fresh as well. It hasn't been used yet. ICT actually says mark up the opening price. Okay, I'm sorry, the closing price right here. If he was shooting a video, he would mark up that. He would just draw a line out. He normally wouldn't put mark up the whole body, but I just like to mark up the whole body. So once price hits this wick right here, I'm going short 1 lot. And then when it comes up to this, it may come up into this gap right here. Let me see. Yeah, this gap right here. So I'm going to go short here 1 lot. And then I'm going to go short again a lot when it goes up a little bit higher. I'm in on short right now because I see, I don't know why I'm being a little punk, right now, to be honest with you. I mean, I see price coming down here to take out this wick low. I probably wouldn't want to hold for it. I'd probably just get out at the body low. But once this low right here is hit, this mitigation block, I want to go short a lot and then a lot right here. I don't see it going any higher than that. Okay, stop loss is going to be up here. And if I had to take a loss, then so be it. Oh, man. A lot easier said than done. I wonder how long this is going to take because I need to head out shortly. Live trading. Okay, so we got the swing low right there. Okay, we're looking to the left. This right here, that dotted green line is a fair value gap from a big push and this is the order block. When we look all the way to the left, this is the 1 minute chart. Okay, we got the sell side body down here, and then we have wick consequent encroachment, which is 50% of a wick, because the algorithm look at wicks as gaps, so we still have to mark that up. And then we have the actual sell side, the actual wick low. So, but we seeing a strong reaction right now off of this bullish order block. Okay, so it's nowhere else it can go. It might reject off of this wick right here, but I see it coming up into this bearish mitigation block right here, and possibly filling in this gap of going to 50% and then rejecting back down. So let me show what I see happening right now based on what I'm looking at. Now, according to the ICT macro, this was just filled in. Let me lighten this up. So that gap right there was just filled in. Okay. And so I see price coming up here to this wick right here, or coming up here to this box and then rejecting down. Either it's going to reject off of this body low, but I really see it coming to this sell side wick low, which is where it says sell side, and I should have put sell side wick low. So I'm in on a short right now. Okay, let me back it up. I'm in on a light leverage short. I'm in drawdown. Okay, it's cool with me. Okay, well, small profit in drawdown. Okay, but that's what I see happening right there. Me. Uh-oh. Delete this. Okay, so let me draw this again. Live trading is a lot easier said than done. So if you don't see people live trading, I wouldn't trust it. Now, I see price pushing down right here. I am in a short, but to be honest with you, I'm not trusting that. I'm not going another short right there. I see price hitting that wick right there, or coming up to here and then rejecting down to either this body, sell side body, really the wick down here, the wick low. Okay, that's what I see happening. That's what I'm holding for on my short. I'm short on a low leverage right now. Okay, I'm not gonna make that much money. Okay, but I'm telling you, if it comes up higher, I'm gonna hit him in the head with one lot. Okay, because I'm on low leverage right now, 0.25. Okay, and on a short right now. The only reason I went early on a short is because I understand how the structure works. Okay, the biggest thing with this stuff is you have to trust yourself. Okay, you see it dropping like crazy now. I don't care about none of that. When it hit that body low, I'm out. Okay, we had a reaction off of this bullish order block, and this macro isn't really working like I thought it would work. Uh-oh, you see it pushing down. I'm gonna go ahead and ride the lightning like ICT says. Let me go ahead and get out of here. Close the order. I'm going to go ahead and close that because I need to be disciplined. Okay, I just closed the order, so it's a small little profit of $20. Okay, and I just said that I would get out once it hit the body low. Okay, look what happened. It hit the body low and rejected. Now, I think it's going to continue to go lower. Okay, it's going to continue to push lower, but I'm not going to gamble and hold out for that. Okay, it's really pushing hard to come down here. All right. So that's live trading. I'm not going to, I wasn't going to hold that short. I got in early. Now, the actual ICT macro, let's see, is this a gap right there? See, I must have missed out on this. I must have missed this gap right here. This could be a gap as well because the algorithm looks as open wicks as gaps. So that's another thing. But I'm looking at this gap right here. It was filled in with this wick right here, but no body was on it. So yeah, this thing is, you see how if it's pushing up now, you see that body right there? That's the sell side body low. That's what I'm saying. Most likely it's just going to push up and push all the way down and come down here, but I'm too low, too chicken to hold out for that. Thanks for watching this live trading, the ICT macro. It didn't really follow the macro rules. I mean, it did take out a high, but it usually is supposed to fill in the gap and take out the previous high. I just followed the structure on this one. I really didn't trade the ICT macro way. Thanks for watching.